wondering if that changes your thesis at all, and what you think the implications are for inflation and for stocks.
Right. So, they really kind of dressed this up. They kind of remarketed it. It's kind of Build Back Better, kind of watered down so we can get Manchin on board and let's kind of say we want some type of victory here. But it's not a victory for the American people, that's for sure, and for consumers. I do think that there's some, Nancy, in our forecast, we have a lot of this kind of elasticity of demand that we look at. That is, when you raise prices, how much demand you're going to have. We're starting to see some softening in the areas which are concerning us the most. Look, in the CPI, you break that out. Housing is very sticky. That's going to stay kind of high. But we did see food and energy come down a bit. And so when I say elasticity of demand, we're starting to think that natural, human behavior starts pulling back spending, starts pulling back in their own ways, and that inflation may, even with this offset of this kind of Inflation Reduction Act, which, by the way, it's kind of a funny name for all this, that in itself, we're seeing consumers pull back, Nancy, and that gives us hope that we may have, again, I hate to say peak inflation because that's not going to do well. It's not going to age very well to say that, but we're getting closer to a peak inflation than we are.
Well, I look at skyrocketing rents, Ken. Rents skyrocketing. Guess what workers do? Demand more money because their rents have gone up. In New York, 15, 20, even 30%. That's the upward inflation spiral that the Federal Reserve ought to be worried about. And I'll just add before we go, this inflation boondoggle that the Democrats have passed, the notion of giving people a subsidy to buy something that's in short supply and then calling it inflation fighting is next level idiocy. But that's what the Democrats have done. Ken Mahoney, good to see you. Thank you so much.
Good to see you also. Thank you.
Your morning mover.